What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. In this video, we will talk about the airlines industry, and more specifically, we will talk about an ETF called JETS. So their ticker symbol is JETS, and this is an ETF that essentially tracks all the major airline companies, manufacturers, and service providers in the United States and internationally. So I will share with you guys what their holdings are and what are some of the companies that are in this fund. And we will also try to analyze this stock and this ETF from a technical standpoint. So this right here is the chart, and I will also compare it with all the different airlines. So we'll look at it on a comparison basis and how well this ETF is doing versus American Airlines, Delta, United Airlines, Southwest, and Spirit. I will also share with you guys some of the key reasons why we've seen such a rally in the airlines industry more recently this week, and where I personally see this ETF and the airlines industry in general going next week and weeks after that. So if you enjoyed this video, please give this video a thumbs up because it really helps out with the channel, and it really helps me grow my channel as well and recommends this video to other people who are most interested in watching this. Also, subscribe and hit that notification bell so you don't miss out on any future videos related to the stock market, investing, and technical analysis. All right, you guys, so here we are. This right here is JETS. Their ticker symbol again is JETS, US Global JETS ETF. Current price is $20.09. But if you were to scroll down, it essentially says that it invests in companies within the airline industry, which spans passenger airlines, manufacturers, airports, terminal services, small, mid-cap, and large-cap companies that are included from both the United States and internationally. So it gives you a very good understanding in general as a whole how the airlines industry is doing, as opposed to you looking at specific stocks such as American and Delta and how they're doing. This ETF will give you an overall idea on where the stocks for these companies are going, because the pattern is going to look very similar, which I will show you guys in just a minute. But if you scroll down, you guys can see that their majority holdings are in the United States, about 80%. The UK is just under 3%. France is 2.25%. Mexico just under 2%. And Brazil is 1.74%. Now, if you look further, airlines consist of about 86%. Then aerospace and defense is just under 5%. Airport services is 3.55%. And the air freight is going to be 5.81%. So we know that all these industries in general have been affected with everything that's going on with the recent events due to travel demand being really, really low. So all these industries have taken a hit, and this ETF has reflected that in its stock price. So if you scroll further down, this right here are going to be JETS top 10 holdings, and I will put a link down in the description below for this so you guys can go ahead and read the report and do further research if you need to. But essentially it goes over that Southwest Airlines is about 12% of the fund, American Airlines is about 10.5%, United Airlines is just under 10%, Delta Airlines is 9.68%, SkyWest is under 5%, JetBlue is 3.88%, Spirit is 3.9%. So top 10 weightings are close to 70%, all of which are essentially in the United States, and they're operating within the US. So now we're going to jump back into my TradingView platform, and we will try to analyze the stock and where I personally see the pattern going in the near future. All right, you guys, so here we are again inside my TradingView platform. If this is the first time you're seeing this, this is the platform that I use to analyze all my stocks, patterns, and create my watch list, create alerts. So if you want to get started, click that second link down in the description below, and you can get started for free. So this right here is JETS. Again, if you were to compare this ETF with any other airline stock, the pattern is going to be very similar. So let's type in AAL, which is going to be the American Airlines company. So this right here is going to be American Airlines, and let me go ahead and remove all these different trend lines, and you can see going back as far as February 11th, and let's type in JETS down below. So you can see how the pattern is essentially very similar, because we had this big drop, then it started consolidating sideways, forming a horizontal support. Similarly, JETS was also consolidating, forming a horizontal support here, and then pushed above its 200 moving average, which is a blue line, and essentially skyrocketed all the way to $22. And same with American Airlines, where they started consolidating for the longest time, broke above its 200 moving average, and then pushed up all the way to $23. If I were to type in UAL, which is United Airlines, you can see that the chart again is going to be very, very similar. They're exactly the same, because this ETF right here consists of all these airlines. So you can see this big drop, and it was making these lower highs and horizontal support lines before breaking above and giving us 176%, going all the way to 48 Now let's type in Delta. Their ticker symbol is DAL. And you can see that the chart, again, is very similar to the one below, which is the ETF that we're trying to analyze. So that being said, there are some reasons why we've seen such a rally in the airline industry. The first one is that American Airlines came out and said that they were flying close to 110,000 passengers per day on average in the month of May, as opposed to the 32,000 passengers per day on average in the month of April. So we've seen close to 5x in the number of passengers per day on average in just 1 month. So that's quite a spike in demand. So that's what the market is discounting right now. And also, because of the CARES Act, there is a lot of liquidity with these airlines companies, and they're able to meet their debt obligations for now and keep people on the payroll without letting people go. So those are some of the key reasons why we're seeing such a spike and rally in the airlines industry. From a technical standpoint, it goes without saying that I would be very cautious holding this because the RSI is at 77. It was even higher than that on June 4th, close to 90, which is extremely overbought. The MACD also showing signs that it's peaking out and it will potentially pull back and correct itself. So essentially any stock or any ETF, when it surges this high, this quickly, it's very difficult for the stock to essentially sustain that level for very long. So in the case of Jets, it's essentially doubled in value since May 15th to now June 6th. It's essentially gone up close to 90%. So that is quite some momentum and aggressive buying in the market. I also want to mention from a technical standpoint, all these airline companies and Jets as well, because again, it's a fund that tracks all these airlines, was making these lower highs. So it wasn't going as high as it did the previous time. And that's what this trend line identifies. But at the same time, it had this horizontal support at around $11.85, which I've recognized here. So you guys can see that it was making kind of that descending triangle. And as soon as it broke past this lower high, this lower descending triangle, it surged up close to about 40% in a matter of just 2 to 3 days. So that is quite a breakout. And the volume also saw a spike, as you guys can see down below. The white line is the average volume, which was 3.83 million versus volume that was traded on June 5th for this ETF. And if I were to pull up the chart for any other airlines, we'll see that spike in volume as well. So for example, Delta. So in the case of Delta, you guys can see that it had close to 130 million shares of volume versus its 73 million shares in average. So that's almost twice the volume that we saw. And when there's volume, there's opportunity. So now if you look at UAL, which is United Airlines, and the volume for this one was also 135 million versus the 81 million that we usually see on average. There's two types of people in the airlines industry. There's an investor and there's also a trader. So if you're someone who's investing in these companies for long-term growth and you believe that they are going to eventually come back when travel demand comes back, because that is the key indicator for your investment strategy, is essentially understanding when the demand will come back. And the CEO of Boeing essentially said that due to this global pandemic that we have, we might not see a 50% return to demand levels by the end of this year, and we might not even see a 100% return in demand levels for another 3 to 5 years. So that is a very long time for the demand to eventually come back. So going off of what he said and understanding that as an investor, this is something of a long-term play and you don't care much about the short-term fluctuations and the short-term swings for these stocks or ETFs, and you don't need the money, then it's completely fine, all the power to you. But if you're someone who's actually trading this ETF or these different airline stocks, I personally would be very cautious and lock in profits when I see an opportunity like this. When I do see these stocks surging up close to 60, 70, 100%, that is absolutely, in my opinion, the time to lock in profits as opposed to being greedy and hoping that it's going to continue to go up. Because looking at the technicals, I do see that they're very overbought and there's going to be a pullback coming very, very soon. If not next week, the weeks to follow with that. Because it becomes really difficult for any ETF going back to Jets and any stock to sustain that level for very long. Now, looking at some of those macroeconomic indicators, demand is going to be the key driver for the success for these airline industry. But the CARES Act also expires soon, which is going to create some liquidity issues for these companies. And the possibility for one of them, if not more than one of them, going bankrupt is still out there. we're still going to wait and find out how these companies react to the fact that there's no more funding from the government and they are going to depend on all the revenues that they're generating for their companies to, again, meet those debt obligations, keep themselves in business. So there you go, guys. That was my quick technical breakdown and overview of the airlines industry. I wanted to talk a little bit about the demand levels, where we are currently with what American Airlines said with their average passengers per day. And I also wanted to talk a little bit about the CARES Act and this ETF called JETS, ticker symbol JETS, and how it essentially mirrors all these different airlines stocks and gives us a complete overview of how the industry as a whole is doing. Giving you guys a recap, it was making lower highs and horizontal support at around 1185. There was some really good support at that level before breaking out and surging all the way to $22. Currently sitting at $20 in my opinion. In the near term, over the next few weeks, I do see a pullback break below the 9 EMA and pulling back at least down to the $17 level, which has acted as a previous resistance for the stock and can very well act as an ongoing support. So I hope you guys enjoyed this video, and if you did, please make sure to give this video a thumbs up and subscribe to the channel if you haven't already. I really do appreciate you guys' support. And as always, have a great day and happy investing.